Hey everybody, what's going on? It's James here, and I wanted to sit down and shoot a quick little video for you. It's Tuesday, November the 10th. It's not so much a market update video as much as a trading lesson, and hopefully something that saves you from losing a lot of money in this cryptocurrency casino. So before I jump into the content, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already. And of course, don't forget you can check the description for a link where you can join my Patreon to get access to more frequent updates. So the first thing that I want to start with today is actually this idea or something that I've realized with this space. I'm going to try to keep this video under 10 minutes, so we'll see how it goes. But in this space, I've noticed, I don't know if it's because it's just so testosterone driven or what the deal is, but it's like people mistake humbleness for something other than what it is. So I'm not going to turn into one of those big flashy guys that start flashing pictures of cars and houses and all that kind of stuff, because I live a minimalist lifestyle. I don't have any of that stuff. It has nothing to do with whether I can afford it or not afford it. What I do want to do is just share some student results with you. These are actually results from the last couple of days. This is my top student, so I want to be fully disclosure about that, fully transparent. It's not all my students getting these types of results, but this one student, he joined my course last year, and these are just some results he had over the last couple of days. This does not include yesterday or the day before, but the market's been super volatile. So I want to show you what's possible when you don't focus on the macro stuff, when you're not worried about what Bitcoin is doing in a long term, and you're just worried about the intraday movements. People say, oh, you can't make good money scalping Bitcoin, or you can't make good money, scalping crypto. You got to do this and you got to do that. Well, this guy right here, he's anonymous, so I can share his numbers. Nobody's going to go after him and say, give me all your money. So here it is. His first trade here, $8,413 profit. Second trade, $272 profit. Next, $557. Next, $1,092. Next, $588 and $5,165. Next, $486. Next, $3,483. Next, $450. Next, $438. Next, $272. Then $712. Then $526. $4,030. $1,148. Right? That's not all the screenshots he sent me. Like I said, this is actually from a couple days ago. He's sent me more since then. Right now, he's sitting in a trade that he's up roughly $50,000 on. So it's going pretty well. And all of that is based off of these setups that I'm always talking about in my videos. So for example, last week or the week before, I shared openly and publicly one of the setups that I created called the 3 Little Pigs. That's actually the weakest of the setups that I created. I created about 4 or 5 different setups. I have one called the Racing Rabbit. I have one called the Tilted Bird. I have one called the Stretch Trade. I've obviously got the 3 Little Pigs, and there's a couple of other ones that I have as well. And what we do is we simply wait for the market to put in this very specific structure, and then we take a trade based on that structure. We're not taking trades based on triangles and wedges and all that kind of stuff that everybody else is doing, because guess what? Institutional money, they know that that's what retail is doing, and they use it to their advantage to catch retail offsides and to punish them and make money. So I'm going to show you quickly. I can prove this, right? So look at this chart right here. This is obviously a Bitcoin chart. This is a weekly chart. I'm going to try to go through this very quickly, right? What they will do with Bitcoin, and they do this in the smaller time frames and the larger time frames. Ever since institutional money got involved back in 2017, right at the top, CME opened up, institutional money started pouring in. Everybody thought that was a good thing. It was never a good thing. It's a bad thing. They've developed this range over the last, and I didn't mean to draw that like that. It needs to be straight across. They've developed this range, okay? So what they will do is they will basically set up retail where they will take one side of the trade, and when enough retail is off sides, then the whales or the institutional money will go the opposite way, and they will wash those retail traders out and take their money from them. So if you really want to, trade swing trades and position trades, yes, TA is important, but you have to always be aware of what is institutional money probably doing. What is the herd doing? And most often the herd is going to lose. So let me give you a perfect example of this, okay? Here's what they did. They built this range back here. And if you were around crypto back here, you remember that most of the quote unquote gurus, most of the talking heads, most everybody on crypto Twitter and social media, they were bearish. They were thinking it was going to go to $1,000. So these whales just built this range here, and they waited and waited and waited. And when enough retail was off sides, short or out of their spot Bitcoin waiting for that drop, they pushed it up. And how do I know they did this? Because you see this huge candle. That is not a whole bunch of people deciding on the same day at the same time to suddenly start buying Bitcoin. Those are stop losses. Those are shorts that are being stopped out. And when a short is stopped out, it causes buying pressure and it pushes the price up. That's what creates the liquidity gap. So those were shorts being washed out. So what did they do after they washed those shorts out? They built a new range. What was everybody doing here? What was retail doing? You go back to Twitter at this time, all the big talking heads were talking about, going short and it going back down and filling in this gap, which is funny because later when I said it was going to be filled in, they didn't, they thought that was hilarious. They were trying to short back here, right? The same people that were super bullish over here were actually bearish back here. So this is what they did. Institutional money let them build their shorts. They let retail load up. And once they were loaded up, what did they do? They sent price straight up and washed out all those shorts. Got it to this level. What happens now? Okay, well, this is parabolic. It's now went up from $4,000, $3,000, whatever it was, $3,100, all the way up to $8K. All right, everybody's getting short up here. This is distribution, distribution, distribution. And psych, straight up, washed out all those shorts. Got up here. Now up here, the temperature of the room had changed. All of a sudden, everybody and their brother was what? Everybody and their brother was bullish, talking about all-time highs, all-time highs, all-time highs, even though there's a descending triangle there. All-time highs. So what happened? Institutional money ranged that market sideways, let all those longs load up from retail, and then crushed their dreams, washed them all out. Then what did they do? They washed it sideways. Retail got bearish. Okay, we're correcting. We're going to go down to 6,000, 5,000, 4,000, whatever the case may be. And they started to put the drop in, laid that bear trap. And what did they do? They pumped it up and crushed those bears, right? You go sideways. What happened here? Everybody's getting super bearish. Everybody's talking about, okay, we're probably going to go down to 5,000. You go to Twitter. Everybody's talking about the 200-week moving average, blah, blah, blah. What did they do? They waited, crushed those bears. Up here, this was a nasty, nasty trap because a lot of people got in trouble with this because what they were doing, this is on a log chart, let me put it on a non-log. What they were doing, even bears who were correct about this whole downtrend, they flipped bullish on this candle. And why? They flipped bullish because they pushed this up and closed it just above this one. So now it's a quote-unquote higher high. But guess what? As soon as they did, they pushed price up, let the retail load up their longs. Oh yes, baby, we're going to new all-time highs. And then they crushed the bulls. Are you getting it yet? You are trading in a casino where the house has the advantage. They're going to watch what you do. And by you, I mean retail traders. They're going to watch, and I'm a retail trader. They watch what we do, and then they try to take the opposite side of the trade. So if you're going off of this textbook TA and wondering, why the hell do I keep losing money? That was a wedge. That was a triangle. That was this. That was this. It's because they paint these patterns and then they bust them the wrong way on purpose, right? It's just like this wedge that I was watching. And again, I don't trade off of these patterns. I trade off the setups. This wedge played out perfectly, and then what they do, everybody's getting short, punish those bears, right? If you understand this, you can take it and you can apply it to the smaller time frames as well, and it will drastically help you with your trading. But I don't trade off of like normal TA. Like I don't trade off of triangles and flags and all that kind of stuff. Like I use analysis. I do videos on it, and I talk about this might be what's happening. But when I'm taking actual trades, when I'm entering a trade and exiting a trade, it's based off of these setups that I talk about, right? The same setups that I showed you a few minutes ago are the results from where my student had made all that money over the last couple of days, just trading those setups, right? What I'm getting at here is think about what happened. We have been in a range for 3 years. You see this range? Ranging sideways, ranging sideways. They just pushed it out of the top of the range. What is retail doing right here? Do you think retail is shorting right here, or do you think the majority of retail is longing right here? Because I got to tell you, the majority of retail is looking at this range and saying, oh, we've broke out of the range. We're going to new all-time highs. So what if this is just one beautifully laid bull trap, which, by the way, is what I think it is, which is what an upthrust after distribution does. It punches past the previous high so people get excited, and it gives whales and institutional money an opportunity to unload their bags. This is how the stock market works, and it's how crypto works. So mark my words, if we come back down inside this range, I fully expect that sooner rather than later, we will retest the bottom of the range. And depending on what the temperature of the room is, we may break south of that range and go ahead and finally hit that $1,100 target, that old 2013 high, filling all these gaps all the way down. Or they may wait for the shorts to load up if we start going down and punch it right back up. This is absolutely cliche, right? They just set these traps, and then once enough people are off sides, they liquidate them, they take all that liquidity, and they cash out their positions and make a ton of money doing so. It's just like down here, a lot of the same gurus who were super bullish back here, they were suddenly turning bearish down here. And what happened? That's where the institutional money was loading up their bags for the next pump. So I can't guarantee anything. I can't guarantee what's going to happen. All I can do is look at a chart and try to use logic versus emotion and say, what's the most likely scenario? What is, the average retail investor or the average retail trader, what are they doing right now? And I want to trade against them. I don't want to trade with them, right? You can go down to the 5-minute charts, you can go to hour charts, 4-hour charts, daily charts, weekly charts, monthly charts. You can look at altcoins, you can look at Bitcoin, you can look at US dollar pairs, you can look at Bitcoin pairs. It's the same thing over and over again, right? This is what they do. They set up ranges, they use the range to build positions, right? They'll put buy walls underneath the price, they'll put sell walls above the price so they can keep it locked in. And then as soon as they have enough position that they're happy with it, and as soon as enough retail is off sides, they'll remove one of those two walls and they'll send the price skyrocketing through it, either down or straight up to wash you out. So that is why I do not do position trading based on chart patterns and things like that. It's just good for technical analysis and good for macro pictures and good for making videos. It's not good for trading. Not great for trading at all. All right, so hope you guys enjoyed that. It's just a fresh look. Again, it's not even about being bearish. It's not even about being macro bearish. It's just simply about trying to show you that watch for the ranges, try to watch for what the masses are doing, and ask yourself, is institutional money more likely to go long here, or is institutional more likely to go short here? Who's off sides? And whoever's off sides, most likely, they're going to be the ones that lose. So obviously, with all that being said, I am just some guy sitting in a spare bedroom, so I could absolutely be wrong about all this analysis, and that's why you should always do your own due diligence, and you should seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed this video, be sure and give it a thumbs up. Make sure you subscribe to the channel, and of course, make sure you check the description. There's links down there to join my trading course if you'd like. There's links to sign up for a Bybit with my affiliate link, get some really cool deposit bonuses, and there's a link to join the Patreon if you'd like access to more frequent updates. This is James with Crypto Common Sense reminding you to please trade safe.